Welcome back, everyone. Today we are bringing you a brand new explainer, and man, I am absolutely thrilled about this one. We're doing a complete deep dive into a true corporate giant. We're going to look at the anatomy of a Titan, Tata Consultancy Services, or, as pretty much the whole world knows it, TCS. If you've ever wondered how a company becomes just this unstoppable force in the global market, well, this is the explainer for you. We're going to unpack their history, dissect those crazy financials, and figure out exactly what makes their business model so incredibly resilient.
Okay, let's dive into this. Here's our syllabus for today's explainer. Just to break it all down, we're going to cover first the TCS juggernaut, then a history of firsts, third, the financial engine, fourth, the competitive moat, and finally, Nifty 50 market dominance. All right, let's get right to it.
Part 1. The TCS juggernaut, the absolute flagship of the Tata Group.
Look, it's honestly impossible to talk about Indian business without talking about the Tata Group, right? But to understand Tata today, you really have to understand the massive gravitational pull of TCS. I mean, they operate across 46 different countries. They are a gigantic driver of India's IT exports, offering everything from high-level consulting to heavy-duty infrastructure support. Within the massive Tata Group, which has its hands in literally everything from steel to consumer goods, TCS stands out as the undisputed flagship company. They are recognized all over the globe for having these incredibly strong delivery models.
Moving on to Part 2. A history of firsts, covering 50 years of milestones.
Every single data point on this timeline is, well, it's a thrilling milestone. And not just for TCS, but for the entire Indian tech industry. Back in 1968, they were founded as India's very first software services company. Just think about that for a second, ushering in an entirely new era for the country's economy. Then, fast forward to 2003, and they crossed this massive threshold, $1 billion in revenue. $1 billion. Just a year later, in 2004, they went public with the largest IPO in India at the time, raising nearly $1.2 billion. But actually, the absolute barrier-breaking moment? That came in 2018. TCS became the first listed Indian IT company to breach a $100 billion market capitalization. I mean, wow. It was a moment that really ushered in a whole new phase of growth for all of India Inc.
Which brings us to Part 3, the financial engine. It's time to unpack the numbers.
Now, what's really interesting about this slide is this staggering number right here, 51.81%. This is their return on equity, or ROE. So, stripping away all the financial jargon for a second, ROE just tells you how efficiently a company's management is using shareholder equity to generate profits. For some context, an ROE consistently above, say, 15 to 20%, that's considered really healthy. TCS is sitting at nearly 52%. That is literally a masterclass in supreme management efficiency.
And right behind that, I've got to hit you with this metric, 63.03%. This is their return on capital employed, ROCE. While ROE looks specifically at shareholder equity, ROCE looks at how effectively the company is using all of its capital to generate profit. Seeing an exceptionally high ROCE like this, it proves that TCS is just a machine at deploying resources to maximize their returns.
Let's pull it all together on this dashboard. We've got our incredible ROE and ROCE at the top, but check out these valuation metrics. A price-to-earnings ratio of 17.85 and a price-to-book value of 8.71. These premium valuations, they reflect immense market trust, and it's backed up by rock-solid consistency. Take their 5-year sales growth of 10.22% and profit growth of 9.75%. Companies like TCS, they generate enormous free cash flow, and that gives them massive financial flexibility for things like dividends, like that 2.32% yield, as well as buybacks and reinvestments.
So that leads perfectly into Part 4, the competitive moat, and exactly why clients stay.
So how exactly do they generate that much cash so consistently? Well, we have to look at the operational reality. Warren Buffett famously said, "Never invest in a business you cannot understand." And this brilliantly illustrates our point here. If we really want to understand why TCS is so profitable, we have to look past the spreadsheets. We need to understand exactly how they embed themselves into the companies they serve. Basically, we have to understand their moat.
The real secret to TCS's success is a concept called a switching cost moat. So what is that? It's a sustainable competitive advantage that gets created when it becomes enormously expensive and frankly super risky for a client to change vendors. I kind of like to think of this as the Hotel California analogy. Once a massive global corporation brings TCS in to build and integrate their vital banking software or their huge enterprise resource planning systems, leaving is almost impossible. The sheer risk of ripping out the digital nervous system of your company just to switch to a slightly cheaper competitor is just way too high.
So the crucial point is that, because of this deep integration into corporate systems and the enormous risk of replacing them, TCS gains tremendous long-term pricing power. They don't have to constantly slash their prices just to keep clients from walking away. This exceptionally high client retention, combined with that pricing power, is exactly what feeds all that massive free cash flow and that eye-watering 52% return on equity we were geeking out over a few minutes ago.
But here's the thing, TCS isn't just resting on its laurels. They are actively defending this moat. To maintain those high switching costs, you have to offer technology that is constantly evolving, right? So clients never even feel the need to look elsewhere. In 2017, TCS made a $50 million strategic investment to inaugurate the Tata Innovation Center at Cornell Tech. They are actively putting money into digital innovation and joint academic research. This ensures they stay way ahead of the technology curve, proving to their clients that they're partners for the future, not just for today.
Part 5. Nifty 50 Market Dominance, the heavyweight.
Let's move to the macro picture and see how this all builds up. 8.2%. That is TCS's weightage in the Nifty 50 index, trailing only behind Reliance Industries. This staggering allocation means that as TCS's stock goes, so goes a massive portion of the entire Indian equity market. When you look at their tightly bound 52-week trading range and just their incredibly resilient stock performance, it proves that their stability enhances the stability of the entire index. It completely cements their status as a true market heavyweight.
Which leaves us with this final thought. We've seen the $100 billion+ legacy. We understand the high switching costs and that massive return on equity, but look, technology moves fast. With AI and cloud computing completely changing the landscape as we speak, how will TCS evolve its formidable moat for the next 50 years of digital innovation? It's a fascinating question, honestly, and watching this IT giant navigate the future is going to be incredible to witness. Thank you so much for joining me for this explainer. I really hope this deep dive gave you a whole new perspective on what makes a Titan tick. Keep learning, and I'll catch you on the next one.